So we've been working there for a number of years, and at this point we have participated with the Afghanistan Credit Union Group, which is called the Islamic Investment Finance Cooperative Association, in setting up 32 really strong credit unions that we feel very good about, very deeply rooted in their communities, and they're serving 100,000 people throughout all of Afghanistan. And so this was an opportunity to visit with them, see the results of their work. We've done a number of projects in Afghanistan. This was closing out, finishing up one of those projects. And the association was very proud in that they were reaching a point where they were applying for membership in the World Council. So we went out, we met with the Afghanistan Association's Board of Directors, talked to them about their accomplishments, talked to them about membership in the World Council, and then we brought that back to our board with their membership application, and our board approved their membership. So they're very proud, and we're very proud that they're now officially members of the World Council of Credit Unions. You know, the credit union model, which is a cooperative, member-owned, not-for-profit institution, really fit well within the Islamic finance rules in Afghanistan. The notion of sharing the profits of the institution with the members, the notion of investing in those members, investing in those communities. So the credit union model adapted well in Afghanistan. Afghanistan is an Islamic banking model. So the credit unions cannot pay interest on savings that the members put in the credit union. They can't charge interest on the loans that the credit unions provide to the members. Members put their savings in the credit union in the form of shares, and then the credit union will share the profits of its operation with the members. When a member takes a loan, then very often it's done on, for example, a leasing type product, where if the credit union's member is buying equipment or buying land or buying a building, the credit union will actually purchase the asset, the equipment or the land or the building, and then the member pays rent to the credit union. And eventually, over time, the member has paid back the value of that purchase plus a markup, and then the title passes to the member. So credit unions in Afghanistan, many in the rural areas, have provided loans to their members for irrigation equipment, farming equipment, tractors, and they also have provided loans to both farmers and merchants for working material. And very often, again, what happens is the credit union will purchase the material for the member, give it to the member, and then the member will sell that material in the marketplace or invest that in the production of the agricultural crop, and then the member shares the profit of that activity with the credit union. So credit unions in Afghanistan tend to serve the lower income groups and the working groups. So we've seen loans as small as $500, probably average loans run about $2,000, and we've seen loans as large as $5,000 or $10,000. When we started, really there were no banking services available to most of the population. And frankly, one of the reasons that credit unions spread in the rural areas was that very often a farmer would borrow material goods from a local merchant or store owner and then do their production, and very often they didn't have enough return from their production in order to pay the money lender or the store owner or the merchant, whereupon they were then in debt to that merchant. And frankly, to us, it looked like indentured servitude, because then the individual they had borrowed from could tell them, well, you have to plant opium crops, poppy crops, and they would be constantly in trouble trying to repay that loan. So we saw the credit unions as a way to give these people more options and more freedom to be able to have a more positive, constructive source of financing, and give them greater freedom, and give them greater freedom for their family as well. We saw microfinance institutions start in Afghanistan about the same time we started with credit unions, and they were not as deeply rooted in their community. So now, several years later, a lot of these microfinance institutions, which were foreign to Afghanistan, driven, bringing in external capital, frankly, still aren't there anymore. We've seen some growth of the commercial banking sector in Afghanistan. There are more options available in the banking sector to people today, but they tend to work at a higher amount or a higher level clientele than the credit unions tend to reach. And they tend to be focused in the urban areas, where we've been able to see credit unions grow in the rural areas of Afghanistan as well. Some of these communities had no access to financial services before, and so the availability of the credit unions to pull savings, invest in the community, has given people the opportunity to have more land in production, increase their family income, have given merchants the ability to purchase vehicles and reduce their transaction costs. And they've given people the option to buy more material that they can sell in the marketplace. Now, part of the credit union match in Afghanistan was they were very community-driven institutions. So you have the local shura councils involved in the governance of credit unions. They're owned by the membership. And so part of the credit union ethos in Afghanistan is to invest some of the profits and return in the credit union back into the community itself. So we've seen credit unions have invested in bringing better agricultural systems, better lighting systems to their communities. Many of them have invested in repairing, upgrading the mosques in their communities. And credit unions engaged in bringing in artificial limbs. A lot of people who had lost limbs to landmines in Afghanistan. And so credit unions started scholarship accounts for children who had lost their parents to help them get an education in Afghanistan. You know, Afghanistan is still a country which has a number of security problems. And so credit unions have focused on their communities. That's why it's very important to have deep community roots, community participation. Also, every credit union that started in Afghanistan had to work within Islamic banking framework. And so in starting a credit union, we would meet with the local village council, we would meet with their local religious leaders, and then the religious leaders would have to have the concept explained, they would give some advice, and this is how it should fit our local context, and they would write a fatwa, which is a document saying that this institutional model fits within the framework of Islamic finance and Sharia rules. And then every product, again, the credit union would take to the local clergy and to have a judgment, advice, and then a fatwa written that this meets the religious standards. And so the credit unions have tried to meet the local context so that there wouldn't be a reason for any kind of concern or conflict with the local parties in Afghanistan. So I know at the World Council we learned a lot about how to do credit union savings mobilization and financing of members within an Islamic-based framework, which frankly has served us well in working with credit unions communities recently in Libya who wanted to establish credit unions that they'd never had before, but they wanted to do it now within an Islamic framework. And so we could point to the experience in Afghanistan and say, this is how you do it. Very useful for them. And we've had some contact with communities in Michigan, Connecticut, who are looking for ways to serve Islamic members in their community, in their credit unions. And so we hope that what we learned in Afghanistan would be useful to them. Credit unions in the U.S. also are community-based institutions, and I think one of the lessons that we learned walking out of our experience in Afghanistan was how important that is. And that's what set the credit unions in Afghanistan apart from, the commercial banks, where they were afraid to establish branch offices in the rural areas for fear of being robbed. And yet the credit unions were so deeply rooted in their communities that gave them a sense of safety and security. And got a lot of deep community involvement in the credit unions. Some of these credit unions have almost no delinquency because you have the local village council very involved in the institutions, and it's a matter of pride. It's a matter of family image if you fall delinquent on your loan. Yeah, we've had a lot of support from U.S. credit unions that have helped us do this work in Afghanistan, and it's been a long road and certainly very challenging. But what's always been very striking to us is, we hear from credit unions in the U.S. that they want to support this, that they send us contributions that help us do things in Afghanistan that, for example, donor monies aren't available to do. We've had a lot of contact from service people who have worked in Afghanistan and, have looked to know more about what we're doing there because they saw a real need for credit union services that they enjoy in the U.S. and they think can make a difference in Afghanistan.